Hey, hello investors and future investors. Welcome to the channel. For today's video, I will be showing you how to trade Palantir technologies. If you're new to options trading, then you could definitely will be able to do these option strategies and make money, even if you are trading with a small account. Now, if this suits your fancy, then welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim. And on this channel, I show you how I use my portfolio in order to make consistent income. Now, I'm pretty sure you guys have heard Palantir is definitely in the news. It is one of those stocks that get a lot of social media presence. For today's video, I'm going to show you how to trade this stock and allow you to make enough money. I'm going to show you option strategies can be used even if you're trading with a small account. Now, before we get into Palantir technologies, we're going to do some simple basic due diligence. And to get started, we're going to go ahead and go to the Robinhood Advanced feature right here. Now, full disclosure, I do not own Palantir in my portfolio. And the reason for that is that I believe Palantir is an extremely good company. However, I think the stock is way too volatile. So here we are on the graph. And what we're going to do now is that we're going to go to the 1 year outlook. Now that we're here on the 1 year outlook, there's a couple things that I'm going to be looking for. The number one thing is going to be this blue line right here. Now, this blue line right here, you should know by now, is known as the MA200 or the 200-day moving average, as you can see here. Currently, Palantir share price is at 107.33, which is trading above the 200-day moving average. Now, analyst has rated Palantir as a fair value of $90, 90. Once again, Palantir's current share price is trading above even the $90. So, in my mind, well, not in my mind, based on facts, this stock is severely overpriced. Now, I'm going to go ahead and check out one more indicator, and that's going to be our RSI here to the bottom. Now, the RSI stands for Relative Strength Index, and it's what's known as a momentum indicator. Now, Palantir is currently trading at a 53 thereabout on RSI scale. Now, that's a very good thing. Palantir usually goes down on the RSI, but I have not seen it go down to the 30 RSI in a very long time. So here are our three signals. An RSI of 53. A 200-day moving average should be around $70. The fair value is around $90. So all points, all flags lead to Palantir being severely overpriced. Now that we have that under our belt, we have that information. How are we going to use this to trade Palantir and what strategies are we going to use? So for that, we're going to go ahead and we're going to go to trade Palantir options in order to open the options chain. Now, here we are on the options chain. Now, before I get into this, I want you guys to know that I require two things from all my subscribers and all my viewers. Number one is going to always be to make sure you do your own due diligence before investing. The second thing is going to be always make sure you have an exit strategy before getting into any options trade. That being said, if I were to trade Palantir right now, this is the strategy I would be using. So I'm simply going to go to sell. Then I'm going to go to put. And now I'm going to go ahead and choose my strike date. The strike date I will be using is going to be May 30th, which is going to give me about 24 days to expiration. The reason I'm going to be going to May 30th is that the stock price is extremely volatile right now. By going to the May 30th date, I think that's going to give myself enough time to weather out some of this volatility, and hopefully the share price is going to settle down by then. Next step I'm going to do is that I'm going to go below the current share price and I'm going to go choose my strike price. Now, the share price right now is 107.56. So I'm going to be going below that in order to choose my strike price. The strike price I'm going to be going with is the $95 strike price. Now, I'm pretty sure you have realized the $95 strike price is quite far away from the 107. And the reason for that is that because I'm an extremely conservative investor. Also, the fair value of Palantir is around $90, so I prefer to be a lot closer to the $90 mark than the share price is trading at currently. Now, there's nothing better than choosing a strike price in order for you to wait to get a stock in your portfolio. And while you're waiting to get that stock in your portfolio, you're being paid. I mean, that's an excellent strategy right there. So the amount you're going to be paid for this option strategy is going to be right here under your bid price. Let's go ahead and select that. So this first option strategy I would use with Palantir is none other than the cash secured put. Now, for those of you who do not have a big account portfolio, stay to the end. I'm going to show you how to do this exact same trade if you're trading with a small account. Now, with the cash secured put, what you're actually saying is that you do not mind owning Palantir in your stock, but not at the $107 share price. You prefer to pick it up at a $95 share price. And while you're waiting for the share price to drop to $95, there's nothing better than actually getting paid to do that. In this case, you're going to be paid $2.46. Now, $2.46 in options language is going to work out to be $246 in the real world. And that's because each option contract has 100 shares. So that is one option strategy I would do if I were to trade Palantir right now. Now, come expiration date of May 30th, the ideal situation you want is that you want this share price to remain above the $95 mark. I mean, you don't mind getting it at $95, but you prefer to stay above $95. And if that happens, then you could go ahead and do this trade over and over again. And that is how you're going to keep making consistent income and grow your portfolio. Now, if come May 30th, the share price does drop below the $95 mark right here, then you have just owned a very good company in your portfolio at $95 per share. In order for you to do this option strategy, you're gonna need to leave a collateral. The collateral in this case is gonna be $9,500. You come about with your collateral based on whatever strike price you choose, you multiply that by 100 shares. So that's how we came up with $9,500. Now, I did mention to you guys that if you're trading with a small account portfolio, I'm going to show you how to do this exact same strategy. So what we're going to do, we're going to leave everything as is, our sell, our put, and we're going to go ahead and leave the monthly expiration date. What we're going to do now is add a slight tweak to this that's going to make it more affordable for those trading for small account portfolio. And for that, we're going to go over now to buy. We're going to maintain put, and now we're going to choose a different strike price. So the price I'm going to be going with is going to be the $94 strike price, which is one strike price below your $95 strike. Remember, we did think that if we get any price, $95 or below, we're quite fine with that. So there's no need for us to go below the $94 price right here. We're going to go ahead, we're going to click into that. Now, this new option strategy that I've just created is going to be the put credit spread. The put credit spread is an excellent option strategy if you're trading with a small account and you want to trade Palantir. The reason for that is that as opposed to you needing $9,500 in order for you to afford this option strategy, you're only going to be needing around $100. So your new collateral now is going to be $100. This is another income option generating strategy. So once you decide to do the put credit spread, once again, you're going to be receiving some kind of income. The income you're going to be receiving here is going to be $27. Once again, you're going to need to leave a collateral. But as opposed to $9,500 collateral, you're only leaving $100 collateral. Now, this is a super huge gain, and it works out perfectly if you're trading the small account. Your return on investment here, or your investment gain, is going to be around 27%. 27% investment gain in 1 month is extremely good. Now, the previous option strategy, which is the cash secured put option strategy, is what's known as a win-win option strategy. The reason for that is because no matter how the trade goes, you win. Once you do the strategy, you receive money, which you keep. If the strategy goes against you, then you own 100 shares of the stock in your portfolio. If the strategy goes in your favor, then you get your collateral released back to you, and then you get to do the trade again. With the put credit spread, however, if the trade does go against you, then you now lose your $100, but you keep your $2,700. So your net loss is going to be whatever your collateral is minus the amount of income that you received. So there you have it. Now, for the put credit spread, ideally, let me show you where you want the share price to be. The share price, you want it to be at the $95 mark right here or above from expiration date of May 30th. And once that happens, then you keep your $27. This is yours to keep no matter how the trade goes. And then you get your $100 released back to you. And that allows you to do this trade over and over again. If come expiration date of May 30th, this share price now is probably trading way lower, let's say $96. Once you do this trade again, feel free to adjust your new strike price. Go ahead and choose an even lower strike price. Now, the other way that the put credit spread could go, if expiration day comes around May 30th and this share price now goes below your $94 right here, then and only then you lose your collateral, or you're going to lose the difference between your collateral minus the credit you receive. So this one is not a win-win option strategy. So there you have it. If I were to trade Palantir right now, and the only reason I would do that is because Palantir has some very good volatility. Volatility is extremely good for options selling. So if I were to trade Palantir right now, those are the only two option strategies I would be doing. Based on some of the facts that I just showed you, the share price is extremely overvalued right now. So there's nothing better than to try to get this stock in your portfolio at a much reduced price. Now, thank you guys for watching. Go ahead, remember to like the video, subscribe to the channel as well. Most importantly, go ahead and hit that notification bell to get an alert whenever I post a video. I do post pretty often, but here's the highlight of me making these videos for you guys. We specialize on helping small account portfolio grow consistently over time. If there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do would be to share this video with them. Let's help as many as we can. And until the next video, keep pushing your investments.